Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. I always enjoy our Friday together.
Now, Bob, Charts and Markets has a trial offer for their research reports through the end of this year. $60 will get you Bob's weekly Pivotal Events newsletter, along with Ross Clark's ChartWorks analysis. Stock markets have entered their, quote, best 6 months. However, election years, as you know, can provide some unexpected action. Precious metals and bonds are currently seeing significant breaks. Stay on top of those developments with the $60 trial subscription. You can visit chartsandmarkets.com to sign up. Bob, we have a listener question to kick off the show.
Yep.
So this question is from, they don't say.
He didn't say.
Well, okay, mystery question asker.
Yeah.
Here's the question for Bob. It seems like the equity markets believe that the Fed's POMO operations, and what's POMO stand for, Bob?
I think that's whatever. I think it should be FO, Federal Open Market Committee or something. Anyways, the operations are going to lift stocks. They've been flooding the money market. So
now the whole idea, of course, is to boost the market.
Yeah.
And but is there another purpose behind this round of money printing besides just boosting markets?
Oh, yeah. Now, what it is an hysterical response. And you recall that earlier in the year, there were problems suddenly discovered in Argentina and Turkey. Like, all of a sudden, their central bank was running out of reserves, so their currencies dropped and their local interest rates went up. Typical stuff, and that's what happens when you're in getting towards the maturity of a great boom, is that the problems appear in the outlying exchanges first. And then India was having problems, and then China started showing problems. And when I was reading it, maybe that was late June, they were saying that this was policy that the Chinese currency was going down, and I sort of accepted that. And then all of a sudden, the bell rang, and I realized it was just another outlying exchange getting into difficulty. And so then, and the pattern has always been that it starts in the outlying exchanges and then ends up at the financial center, which is New York. So, and that was likely to be discovered in September. And indeed, early September, they had a problem in their money market. Now, let's define a money market as anything shorter than 1 year, and it can go right down to overnight money. And there was a sudden vacuum. And then the Fed then did a repo operation, which was putting in funds today and taking them out tomorrow sort of thing, and which was a measure of the sudden loss of liquidity. Same as what hit Argentina and Turkey earlier in the year, and then India and China in the middle of the year. So it was on schedule. And then if you look, they then have gone to buying bonds. So when you look at the figures, there's Fed assets are just going straight up. So while many think that it's a rescue program, I just look at it as it's measuring the degree of the loss of liquidity being suffered in New York. And there's a distinction that we should make here, and that is that when in a speculative bubble, there's bids for everything, which gives the appearance of liquidity. But the problem is that much of that activity is highly leveraged with Mr. Margin. So it really isn't liquidity, it's borrowed money, and then when the price advance stops, the whole thing depends upon prices going up forever. And here we are. So we're viewing this, and the questioner had the right route that he's following, and there it is, the early stages of a contraction and on schedule. Now, also, the stock market in the U.S., Dow and the S&P, were much higher than one would think, considering there's some problems going on in the money market. And there were some good steps made in the China trade squabble. And of course, you know that the China deal is going to have a trade deal concluded by the end of the year for the next year's election. So that was a plus. And then there were just positives around, like in some areas in the state, some cities, San Diego, house price index were making new highs, and house constructors index was going to the moon and became overbought. So you had a curiosity of some very positive stuff in a season when things could be going down, and that season's not over yet. So the question was good, and you've got Treasury. He asked about Treasury bond issuance going up and debt. In a financial mania, everybody takes on debt. Governments, corporations, individuals, and it's just a period of buoyancy where people take on debt for all kinds of reasons. But each of those great financial bubbles has been greater than the ordinary economy can look after. You just can't service that amount of debt. You know, you've got two things going on. One, you got to pay the interest, and two, there's usually clauses where you're retiring the debt. So this is where then the debt expansion stops and the contraction starts, and I think this is where we are now. So if there's another phase of weakening of commodity prices like base metals and crude oil, which is still, we've got some seasonal weakness ahead of us for those, this market can decline a little yet before the year's over. So we're taking this as you've had the everything bubble, and then now let's call this the everything correction, whereby a number of sectors are getting corrected at different times and rather than all together. So I think we can follow this one out and be on the right side of stocks, bonds, commodities.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, one of the headlines you noticed today, China manufacturing shrinks to its lowest level in 30 years. What's that tell us about the Chinese and world economy?
Oh, that's a weak number, because you've always had the Chinese growth numbers. They say, you'd be 15% growth rate going down to 5% in a recession. But the main thing on this one, so they're hard to make comparisons, but the main thing on this one is that the setback in this economic number is the most severe in 30 years. You got to pay attention to that one. And it's worthwhile broadcasting that, things are no longer partying in China. So
you mentioned as well in the headlines, people just can't get their hands on enough Lamborghinis and other exotic sports cars.
Yeah.
It doesn't seem to be a problem in Vancouver where you see them everywhere.
Oh, yeah. No, the headline was they just can't get enough Bentley, Lamborghini, and what was the last one? Porsches or something. SUVs. And this is a mania that everybody is wanting to buy SUVs or pickup trucks. And pickup truck sales are still going, well, not quite straight up, but sort of steeply up. But it's a sign of the times. You've got then wealthy people wanting to buy high-end SUVs. You've got ordinary people buying pickup trucks like there's no tomorrow. And then the other one I saw here was that the super rich people are no longer buying the grand yachts. But then also this headline included that the boat brokers and dealers were surprised that it wasn't so much the loss of interest in super yachts, but even more ordinary boats. Ordinary people are stopping there. So not everything's in phase. So you got the rich buying SUVs and not buying yachts. So it'll be fascinating to watch and see where it goes.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, you remember the 80s when they were talking about Western separation from the rest of Canada, and now, of course, that's the topic du jour.
Mm-hmm.
Anything you think behind it, or is it just people, we didn't get our way in the election, so now we're going to hold our breath and turn blue?
Yeah, there was some of that, but back in the 80s, it was not just the western provinces in Canada fed up with the central government in the east. It was also Washington, Oregon, Idaho. Remember, they were talking about putting together a Cascadia so that both western regions would get away from the authoritarian monsters in the political capitals. Yeah, there was, there are serious political issues in Canada, and it's very simple. Quebec gets about $12 billion a year in equalization payments, and a lot of that comes from resource production in the western provinces, Saskatchewan, Alberta, and BC, who don't get any of these perks, equalization programs. And at the same time, you've got the federal government absolutely against any resource expansion whatsoever. They put a throttle on it with Bills C-48 and C-69. So how then can Quebec continue to demand $12 billion a year while the politics of central Canada are curbing or preventing any expansion in resource? And by resource, I mean not just the petroleum business, but also mining. And it is astounding that one the federal government would be so reckless. But then they're in a political passion to control everything and control the weather. Hey, nothing to it. Control the climate, nothing to it. Control the economy. So, yes, the West, which Harper and the Reform Party under Manning years ago, the voice was the West wants into Canada. And this one looks like you might just well get out because the central powers will continue to abuse the productive areas. And while one time Ontario was a productive province, but then under about 20 years of socialists, it's completely ruined a very productive province. So it'll be interesting to see how it goes. I think a serious popular uprising will develop in Canada and will move to reform authoritarian bureaucracies in the central part of the country. And I'd welcome it. I think it would be very exciting. It would liven things up tremendously. But, we're going to go back to the question from our listener. He had one part of it, the last part of the question is, what really is the purpose of this latest round of money printing? And that one deserves a direct answer. And one, the central bankers have a theory that they can manage the economy. And the theory goes back to the start of the Federal Reserve in 1913, where then the movers and shakers understood that when you had a financial setback, it would be followed by a recession. So then they invented the theme of the Federal Reserve, whereby it would be the lender of last resort, and then by preventing a financial setback would prevent recessions. There's been 18 recessions since 1913 when the Fed started, so the theory doesn't work. So in direct answer to the question about the purpose of the money printing, one is to prove a theory that's been disproven 18 times. And the other is that they really think that it works. So they're doing it. They think that this is going to stave off a contraction. But as I pointed out when we first looked at the question, is that the issuance of credit that the Fed is doing indicates how severe this contraction is hitting now. And this will, of course, become more obvious on the next slide in commodity prices and in stock prices, which could be starting soon. So that I really like the question.
Bob, thank you so much for chatting with us. And again, a reminder that you and your partner, Ross Clark, have a special offer for our listeners. Charts and Markets trial offer for research reports will continue through to the end of this year. For $60, you'll get Bob's weekly Pivotal Events newsletter along with Ross Clark's ChartWorks analysis. Stock markets have entered their, quote, best 6 months. However, election years can provide some unexpected action. Precious metals and bonds are currently seeing significant breaks. You can stay on top of the developments with the $60 trial subscription. Visit chartsandmarkets.com if you want to sign up.
Hey, that's a good one.
Bob, we'll chat with you in a week.
Good deal. Looking forward to it.
You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. And of course, if you have any questions for Bob, you can send them to info@HowStreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.